Welcome to the Deep Dive. Thanks for tuning in. Today, we've got this stack of reports all about Meta platforms.
Yep, NASDAQ. Meta. Lots to dig into here.
Absolutely. And looking through these, my first reaction was just, wow, how are they managing all this? So today, we're going deep. We've sifted through earnings calls, analyst notes, recent news, basically everything we could find on Meta. Our goal, to give you the clearest picture possible of what's going on with this tech giant. You know, the big question really seems to be, can Meta actually connect its incredibly profitable social media presence with this almost sci-fi future they're building, this whole AI and metaverse thing?
That's exactly it. That's the core tension, right?
Right.
And that's what we'll explore. We'll look at their, frankly, stunning Q2 results for 2025. Then we'll dive into the AI strategy, the huge bets they're making, the money involved.
Right.
We'll cover their advantages, because they certainly have some, but also, importantly, the risks. And what this all might mean if you're thinking about them as an investment. It's about connecting the dots between the balance sheet and the big vision.
Okay, let's start with those Q2 results then, because they really were exceptionally strong, way better than Wall Street expected.
Yeah, they beat expectations pretty handily.
Total revenue hit, was it $47.5 billion?
That's right, $47.5 billion.
Which is a 22% jump year over year. I mean, that's significant growth for a company this size.
It really is. And it shows that core business is still firing.
Definitely. For years, people have wondered if they could keep growing, especially with all the metaverse talk. But these numbers, they show the engine is still incredibly profitable. Net income climbed 36% to $18.3 billion.
Which gives you that $7.14 earnings per share figure. Hard numbers to argue with.
So what's behind that performance? What are the specific drivers?
Well, the main engine, no surprise, is still ad revenue. That was up a healthy 21%.
Okay.
And it's interesting because it's not just more ads being shown, it's two things happening at once. The average price per ad went up 9%.
Meaning advertisers are paying more.
Exactly. They see the value. And at the same time, the number of ad impressions. How many times ads were actually seen across Facebook, Instagram, WhatsApp, Messenger, that surged 11%.
So better prices and more eyeballs.
Precisely. Tells you their targeting is still, well, very effective. And the other piece is just sheer engagement. Daily active people across their apps hit 3.48 billion.
3.48 billion people daily.
Yeah, up 6% year over year. It's a mind-boggling number. You know, it's almost funny. I probably contributed a tiny fraction to that increased scrolling Instagram the other day.
We all did, probably.
But it just shows how vast and, importantly, engaged their audience is. That's gold for advertisers.
Yeah, that massive user base brings us to what analysts call their wide economic moat. It's hard to compete with that scale.
It really is. Think about it. Nearly half the planet using their apps daily. That creates powerful network effects. The more people on it, the more useful it is for everyone else.
Right. Plus the data they have, the brand recognition.
Yeah.
It's a huge barrier for any potential competitor. So how does this incredibly strong foundation, this core business, fuel their next big bet, which seems to be all about AI?
Exactly. That's the connection. The profits from the core apps are what let them pour billions into artificial intelligence. And they're not just throwing money at it hoping nothing sticks. They're seeing real, measurable results already.
Like what?
Okay, so their AI recommendation algorithms, they're demonstrably improving ad conversions. We're talking about a 5% improvement on Instagram and around 3% on Facebook.
So the AI is getting better at showing us ads we might actually click on.
Essentially, yes. Which means better ROI for advertisers, making the platform stickier for them. But it's not just ads. AI is also boosting engagement. Time spent on Facebook went up 5% this quarter, and on Instagram it was 6%.
Because the AI is making the feeds more, relevant? Interesting.
Yeah, more captivating, more personalized. It keeps you scrolling. And another interesting point, a, quote, meaningful percentage of ad revenue is now coming from campaigns that use generative AI features.
Meaning AI is helping create the ads.
Exactly. Especially helpful for smaller businesses, maybe without huge creative teams. The AI helps generate ad variations, text, images.
Okay, that's pretty integrated.
Yeah.
But their long-term vision goes way beyond just improving ads, right?
Yeah.
This personal superintelligence for everyone idea.
Oh, absolutely. That's the moonshot. They've set up Meta Superintelligence Labs. They're working on next-gen Llama models, Llama 4.1, 4.2. The ambition is huge.
What does it even mean, though? Personal superintelligence.
Yeah.
Are we talking about, like, general AI in your pocket? What are the big challenges there?
It's a great question. Think less Terminator-style AGI and more like a a deeply personalized digital assistant, something that lives in devices, maybe like their glasses, understands your context, anticipates needs, interacts using voice, vision.
So like a proactive, super intuitive helper.
Kind of. Seamlessly integrated. The hurdles are immense, though. Getting AI to truly understand multiple inputs simultaneously, speech, what it sees, the environment, that's multimodal AI. And then making it run efficiently on something you wear. Huge challenge.
Plus the raw computing power needed.
Exactly. Which leads directly to their competitive advantages. They talked about this on the earnings call.
What are those advantages? What makes them think they can pull this off?
Well, first, sheer compute capacity. They are building these enormous multi-gigawatt AI training clusters, names like Prometheus and Hyperion. Think data centers the size of small towns just for AI.
Wow, multi-gigawatt.
Yeah. And more Titan clusters are planned. It's an infrastructure advantage few others can match. They're building the whole stack from the silicon up.
So they're not just buying tech, they're building the foundations.
Right. Second, talent. They're pulling in top AI researchers and engineers. Third, that integration point we mentioned, they can deploy AI across billions of users, generating unparalleled data to train the models further.
And that data itself is the fourth advantage, I guess. All that user interaction data.
Precisely. Proprietary data is key. And finally, they're doing full-stack development from the deep research models right up to the consumer products.
Speaking of consumer products, the Ray-Ban Meta glasses. They mentioned strong momentum there.
They did, accelerating sales. Zuckerberg sees these glasses as the key way this superintelligence integrates into daily life. The ideal form factor, he called it.
For multimodal AI, blending physical and digital. It does sound like science fiction becoming real.
It's a compelling vision.
Yeah.
But it brings us to the cost, the financial side of this ambition.
Right, the investment dilemma.
Yeah. So Q3 revenue guidance looks good, $47.5 to $50.5 billion. But the capital expenditure, CapEx, that's the number that jumps out.
How much are we talking?
For the full year, 2025, they're projecting $66 billion to $72 billion.
$72 billion. That's
It's roughly a $30 billion increase year over year, just on CapEx. I mean, that's more than the GDP of some countries. It's a staggering amount of money.
it's not stopping there, right?
No, they explicitly said to anticipate similarly significant CapEx dollar growth in 2026. And overall expenses will grow faster too, mainly due to infrastructure and hiring more expensive tech talent. It's a huge ramp up.
Okay, so that's where the Reality Labs losses really sting, isn't it? That's the elephant in the room.
It is. Reality Labs lost another $4.5 billion operationally in Q2.
$4.5 billion in one quarter.
Yep. So even with the AI glasses momentum, it's a massive cash drain right now. A long-term bet with very uncertain near-term returns. It's like funding a moon landing while also running the world's biggest ad network.
So how are investors reacting to this spending? I mean, $70 billion in CapEx plus ongoing Reality Labs losses. So I got to raise some eyebrows. What's the pushback?
Well, management definitely hears those concerns. Their argument is, look, these investments are essential for the future. They believe they'll generate very compelling returns, particularly by boosting the core ad business with AI.
Right.
The biggest pushback is definitely on Reality Labs and the metaverse timeline. When will that pay off? But financially, Meta is strong. They ended Q2 with $47.1 billion in cash and equivalents. They're buying back shares, paying dividends.
So they can afford it, basically.
They can afford it now, yes. And interestingly, they mentioned exploring co-development models for data centers.
Meaning sharing the cost with partners.
Potentially, yeah. Sharing the cost and risk of building these massive AI factories. It gives them flexibility, maybe brings in outside investment. It shows they're aware of the scale of the financial commitment.
Okay, so huge spending, but a strong core business funding it.
Yeah.
What about other risks? You mentioned regulatory issues earlier.
Right. That's a big one. Especially in the EU, you've got the Digital Markets Act, the DMA, and this concept of less personalized ads.
Less personalized ads. How serious is that? Could it really dent their ad model?
It's potentially very serious. The whole idea is to limit how much user data Meta can use for targeting. If ads become less targeted, they become less effective, and advertisers might pay less or spend elsewhere. Meta themselves warned it poses a risk of materially impacting European revenue as early as later this quarter. So it's not a distant threat. It could bite soon.
Wow, okay. So that's a significant headwind. What about new revenue streams? Things like Threads or WhatsApp ads. Are they helping offset this yet?
Not really, not yet. The guidance is clear. Don't expect them to be meaningful revenue contributors in the near term. They're rolling them out gradually, the pricing is likely lower initially, and they have less targeting data, especially on WhatsApp.
Right. And you mentioned the Ray-Ban glasses. Demand is high, but they can't make them fast enough.
For some popular models, yes, demand is outstripping supply. It's a supply chain constraint they're working on. Good problem to have, maybe, but still a bottleneck.
Okay, let's talk valuation then. Stock price as of July 31st closed at $779.34. That was after a big jump, over 12%.
Yeah, the market liked the Q2 results in the AI story.
But our fair value estimate, based on our models, is quite a bit lower, $667.31. And our price target is $685.59.
Right. So by our metrics, it looks overvalued currently.
Yet the average analyst price target out there is much higher, around 853.3. Some even go up to $935. So the market sentiment is clearly very optimistic, pricing in a lot of future growth. It's trading at a premium to our estimate.
Definitely a premium. And just for context, another data point some people watch is insider trading.
Ah, what's happening there?
Well, there have been significant sales by key officers, the COO, the chief legal officer in Q2 and Q3 this year. If you look at the buy-sell ratio for recent quarters, it's heavily tilted towards sales. Like Q3 had 0 insider purchases and 33 sales recorded.
So insiders are taking some money off the table after the run-up.
It seems that way. Now, you can interpret that in different ways. It's not necessarily a panic signal, but it's information investors consider alongside everything else. It contrasts a bit with the bullish street sentiment.
Okay, so wrapping this all up, Meta seems to be firing on all cylinders with its core business, right? Strong growth, fueled increasingly by AI integration.
Absolutely. The current business is robust.
But at the same time, they are pouring truly unprecedented amounts of money into future bets, AI, Reality Labs with massive CapEx increases planned for next year, too.
A huge investment cycle, yeah.
And they're facing real regulatory headwinds, especially in Europe. Plus, the new revenue streams aren't quite there yet.
Yeah.
It's a complex picture. A company really straddling two different eras.
It really is. Which brings us to the final thought, perhaps for you, the listener. Given this massive, audacious bet on personal superintelligence, given the sheer scale of these investments, how long do you think it will take? How long until these transformative AI initiatives actually translate into the kind of sustained, profitable growth that justifies the premium valuation the stock currently holds? Is the market getting ahead of itself, or is it correctly pricing in a revolutionary future? And maybe are people underestimating just how impactful those giant AI data centers could be for all of Meta's businesses down the line?
That's the multi-billion-dollar question, isn't it? A lot to think about there. Well, thank you for joining us on this deep dive into Meta Platforms. We really hope this gave you some clarity and insight into what's happening with the company right now.
Hope it was helpful.
And if you did find this useful, we'd really appreciate if you'd subscribe to the channel, maybe hit that notification bell. It honestly helps us a lot and lets us keep making these deep dives into complex topics like this one. Thanks again for listening.